Hey guys, welcome back. In today's video, we are talking about how Citadel are being beaten, how shorts are screwed, just how undervalued AMC is, and many more in this video. Firstly, we're taking a look at this. Just in, Citadel is being beaten at their own game by new private trading rooms. Ironically, Citadel is the architect of off-exchange trading, but now they're crying wolf to the SEC because they're not getting the cut from the new system. So what we can see is this article, Citadel's complaint reveals fear of being beaten at their own game. So for those of you who can keep me up to date with these videos, something that we covered recently was how Citadel has been complaining about two things. The first thing was about private trading rooms, and they were raising concerns about how it's not good for the market. The second things in which they brought up concerns about was dark pool trading and how that's also not healthy for the market. And we talked about how that's obviously an extremely weird thing for them to do because they're not focusing and emphasizing on things that matters, such like enforcing trade settlement, which is obviously what we've always emphasized, but also talking about how they've managed to profit off of dark pool, yet now they're crying and rather warning about this dark pool. And we're talking about why they were trying to do that. Well, clearly we have the reasons, right? Because they are not making money anymore from what they used to do. Their bread and butter is now being taken by these new private trading rooms by other people, and they're beating Citadel at it. They're making the money that Citadel used to make, and Citadel is obviously worried, and that's why they were obviously making and raising the concerns. So once again, you have to understand, when these institutions make these points, they're not here to help out the retail, even if they make it sound themselves like they are. Again, we talked about how Citadel talked about how dark pool is bad for the public market. And at first glance, it seems like he's trying to do that for the retail investors. But a few days later, we understand the reason why he was trying to make that point was because of the fact that that system no longer works for him, so he's trying to raise concerns about it. So you can clearly see how pathetic that is. Now, it's no surprise that he's worried about this, especially when you understand everything that's going on in the market right now. We're seeing calls for GME go crazy. We're seeing, all of these volatility going crazy. We're seeing AMC, how they're going to go up in the future. We're seeing how institutions are accumulating AMC, the fundamentals of AMC improving drastically. All of these things are putting pressure on Citadel. And if their primary way of making money is getting beaten, then they have something to worry about. And that's what we are seeing here. You can see they shorted 8 to the bottom while AMC was already infinitely shorted. And they want us to believe that they closed their positions. It doesn't take a degree of high intelligence to know that they didn't buy back a single share. The shorts and their allies are screwed. And so that's obviously what we know. And you also have to understand is that because of the fact we know they haven't closed their positions, that they're still holding on to these shorts, it is costing them money. So you can understand their concerns when they no longer are able to make the money like they used to do before. And if they're not making money like they used to do before, how are they able to finance their short positions? And the biggest part about this is that if they can't finance their short positions, if they can't create new short positions, then they can't suppress AMC. If they can't suppress AMC, then we are going to see the real value of AMC being shown, and that's obviously going to trigger the squeeze. And for them, it will obviously be a catastrophe because they'll have to end up be paying tens, if not hundreds, if not trillions of dollars to just to buy back these shares. You can see AMC, we know about the swaps and the naked shares, but the openly reported shorts on AMC are at a record low. What are they so scared of? So what we're seeing is obviously how they're trying to hide these positions. Now, we already know that they have, the self-reported data. Something that we need to obviously understand is that not to take it for granted. Something else we also know is that they have plenty of ways to short AMC rather than just what we can see. We talked about swaps, we talked about tokens, we talked about these FTDs, we talked about the offshore shares. There are so many different methods, but right now what they're trying to do is they're trying to hide the open shorts. Now, the reason why they're doing that is because they understand what retail has finally understood. They realize they can't just make retail believe everything they show us. And the reason why I say this is because they are trying to make it look like AMC's price is going down despite good fundamentals because people are selling. But we know that, again, when you look through the OBV, when you look through all these other factors, retail institutions, they are all buying. Right now, the net output of AMC shares is that it's buy volume coming in. Now, that's how they try to obviously, try and lie to everyone by, of course, making it look like they are no longer shorting, when still, that is still the case for them. They are still shorting AMC. And so don't be fooled. Obviously, when you see this, we've talked plenty of times about how they're trying to hide it. And let's just show you how undervalued AMC is. This is my favorite visual of how 3 different theater companies have fared in the last couple of years as we separated from COVID lockdowns. 2 look to be trading on fundamental variables and the other not so much. And so this is just to show how undervalued it is. You guys can see this is a chart. This is a graph showing from around May of 2022 going to obviously where we are now in May 2025. So what you can see is something that is crazy. And again, you can already see that the orange line or the yellow line here is, of course, AMC. So companies in this industry have obviously gone up and improved, and as you should, because the industry has obviously recovered, and this is the price that you should be seeing. So why is it that AMC has gone down? And you can see when AMC manages to overtake them, when AMC sees these price surges, it's instantly struck down. But these prices going down isn't normal, because whilst we are also seeing them going down, they're not drastically going down like this. It's not a vertical, cliff where we're seeing the price dropping. We're seeing, if we do see price go down, it should be gradually, like what we are seeing with the black and blue lines, not like what we're seeing with the orange lines. And so this is the first thing to understand, is that we are in the industry that is thriving. We are in the industry that is seeing capital flowing in, that we should be seeing our stock going up. And evidently, you can see that from Cinemark, you can see that from IMAX. But the reason why we are not seeing it is because of the suppression. But this is just to showcase just how undervalued we are. This is to showcase where the ceiling is, the manipulation that is happening, and why institutions are buying now and more than ever of AMC, because they understand what is to come, especially with, of course, Q2 and the rest of this year as well. You can see institutions keep buying more, I'll do the same. And so it isn't just me trying to say that institutions are buying. And again, none of this is ever financial advice, so do take our second of salt. Make sure to do your own due diligence and research. But if you guys take a look at the filings, at the data that's being shown to us, it is shown that institutions are buying, and that is just a fact. And you can see, I'm starting to genuinely believe AMC may have all-time record. So retail stock is meant to say revenue here, but so all-time record revenue this quarter. Nothing about the current price reflects our new reality, and that's a huge opportunity. Now, he's corrected here. It's meant to say revenue, not profits. But even so, even if we were to make a new all-time record revenue this quarter, that will obviously reflect into profit as well. But the main takeaway, the main point about this is obviously talking about and understanding that nothing about the current price is reflecting what AMC should be. And that's why everyone is viewing this as the accumulation phase, why everyone is trying to get as much AMC as cheaply as possible, because they know that once this takes off, it will be an investment of a lifetime. You can also see how, now again, when you see these articles, you should understand that, once again, I don't know if this is auto-generated, but these articles, we tend to not see good articles. But for this particular article, you can see how it says, despite a challenging start to the year, AMC Entertainment Holdings demonstrated resilience during its latest earning calls. So what we have to understand is that, we're seeing maybe a slight change in these articles. Like I said, we're still going to be seeing more FUD articles than the positives about AMC. And that is to be expected when we understand how much of a threat we are to them. But if we are also seeing some articles acknowledging what AMC is doing, then you can understand how not all institution perspectives is that AMC is a bad company, and rightfully so. But again, take it with a grain of salt. With these articles, it tends to be used as a way to get people to stay away and sell AMC shares. So I obviously don't want to take it too heavy into heart. but you can also see AMC 5K candle at night. So we're seeing this. So going back, we're seeing these volume that's obviously pre-market, that's during the night market. And this is in reference to the 24/5 trading. But when we see these volume coming in, and going back to what we talked about here at the very start with how Citadel is obviously crying wolf about, these things, is that they talk about it only when it's not going well for them. But when it's going well for them, when they're exploiting, the retail, they never talk about it. And this is just the case of it. But yeah, guys, thanks for watching the video. I'll catch you guys next time.